Think about moving to Oregon to escape high tax states like California? You better get ready to pay up. Actually, you won't pay up. Your estate will pay up, and it's going to be bad. It's going to be ugly, but you'll be gone. So think twice, shall you? All right, let's see what we got here. This is nuts. I can't get over how bad the estate tax in Oregon is. Now, listen, it used to be just New Jersey and Maryland were the big ones, and I live on the East Coast, so I didn't pay much mind to Oregon. And I used to hammer New Jersey. It was such an easy way to get people to recognize the need for financial planning when there's only a $675,000 estate tax exemption. Those days are gone now because Christie, to his credit, got rid of the estate tax. Unfortunately, he did it by throwing a gas tax in there because New Jersey used to have the lowest gas prices in the union. But he had a compromise, and that's the way politics is. But there's no more estate tax in New Jersey. Maryland, I think they raised theirs. I'll have to revisit Maryland. I think they raised their exemption quite a bit high to at least $5 million. In Oregon, nah. All right, the state tax in Oregon ranges from 10 to 16% and applies to estates above $1 million. But Josh, you have to be a millionaire. That's your home, that's your IRA, and that's your life insurance. If you're estate planning in Oregon, your estate is worth more than $1 million, you have to consider the impact of the tax on your estate. If you think you might be subject to this estate tax, you may want to consider the help of a financial advisor or an attorney. The Oregon estate tax threshold is $1 million, and any estate exceeding that amount is taxable, but the first $1 million is not still taxed. So at least it's not a cliff, which New York is. I'll show you that. It's horrible. Oregon estate tax rate is graduated. It starts at 10% and goes up to 16%. The taxable estate is the value of the estate above $1 million. How to figure out what your estate tax will be paying. First, you figure out what your taxable estate is. Basically everything you own. You own it, throw it in your estate. Next, find your taxable estate bracket in the chart below. The base taxes listed in the second column is what you owe on money that falls below your tax bracket. We'll go into this here in just a second. So here's an example. Let's say your total estate is $5 million. If we subtract out $1 million exemption, that leaves a taxable estate of $4 million. The base tax is $367,000. So again, we have a $4 million estate. So we go here, 3.5 to $4 million. That gives us a base tax of $367,000. All right. Now we take the difference, which is $4.5 million minus the $4 million. So that's $50,000. We times that by 11.5. And what we get is that's going to give us another $57,500. So if we have a $5 million estate, we're going to pay $425,000 in estate tax. Now, again, that includes your life insurance. Life insurance is part of your estate. $425,000 in estate tax. Don't forget, most people's, there we go. I want to show you this. Most people's assets are their home. All right, can't liquidate your home very easily. So how you pay the estate tax is also going to be in their IRA 401k. Hard to liquidate those because when you liquidate them, what happens? You are paying federal income tax to liquidate. So if you have well, let's just do it. I'll show you the online calculator. Let's say you got an $800,000 home. All right, we got an $800,000 home. And we'll say we have no investments. We have, no insurance. We got 2 million retirement accounts. All right, so $800,000 home, 2 million retirement accounts. How much is our estate tax? We hit submit here by my man's over at Maya and Bell. And we're going to pay $184,000. $184,000 on 2.8 million. All right, now, but guess what happens? Where does that $84,000 come from? It comes from your IRA, or you got to liquidate your house. You got to pay for it someplace. It's got to come from someplace. So how much does it cost to liquidate that IRA? Well, or the 401k to come up with the taxes. So if you had $184,000, you're immediately in the, 24%? Let's just say 22%. So it's going to cost you another $184,000 times 0.22, $40,480 right there alone. Actually, let me see if Oregon's got an income tax too. Hold on a second. I'm going to pause. Better, Oregon has an income tax as well. So in this case, you got $184,000 that you have to pay because you got this estate tax right there. All right, so someone's going to have to take the distribution from your estate, your IRA, to pay that. It's going to be $184,000 taxable as ordinary income. it's going to cost you $40,480 to the feds, and it's going to cost you, we'll just say another, I don't know, 5 to 6%. That's another 184,000. We'll just say 5%. I bet it's more than that. It's going to cost you at least $10,000 to the state of Oregon. So in order to pay $184,000 in taxes, because all you have is an IRA or your home, and you got to liquidate something or a 401k, you're going to pay another $50,000 of taxes in order to liquidate $184,000. So it's going to cost you $230,000, yeah, about $235,000 in order to pay $184,000 of estate tax on a $2.8 million estate. Crazy. So that's the tax hammer in the great state of Oregon. Enjoy, my friends. Enjoy. That's fantastic. And again, estate tax only affects the wealthy. So just remember, if you have a house and you have any kind of savings and you have life insurance, it adds to that as well. Now, here's the benefit of life insurance, because if you can liquidate a life insurance policy at your death, well, again, you're dead, but whoever settles your estate, they have an immediate cash in which they can pay the estate tax, so they don't have to take a $184,000 distribution from an IRA. So that's the nice thing about life insurance. You don't have to do that, but it's still going to be taxable, still subject to your estate. The great state of Oregon. All right, we'll see you next time.